Richard Malloch, Hearst Business Media, has had 30% compound growth over the past decade. You went from a glossy magazine seller to an online media entity seller. Tell me about the transition. How'd you do it?
So first of all, Hearst is still a magazine publisher, and we're a worldwide magazine publisher. What we did was build a second business, or in fact, in Hearst's case, a fifth business in information. We're a business that's really focused on must-have information. We aggregate incredible content. We try to look for opportunities where clients need to make better, smarter, quicker decisions. And we drive our content to the point where they can use it in their workflow. We've had extraordinary receptivity to it. We're in finance, in healthcare, and in transportation.
Yeah, you still have those fantastic magazines, but now you're getting paid via subscriptions. The whole idea of getting paid for ads has really come down, and the getting paid for subscriptions has gone up. Talk about that pivot.
So if you think about it from Hearst's perspective in the portfolio, advertising is still a great business and a core part of the Hearst Corporation. But advertising is really tied to a business cycle. Our subscription businesses are not. In fact, they correlate to different things. They correlate to age in the instance of health. They correlate in our transportation business to things like today, bad weather. We do 900,000 collision estimates a day, and when it snows or it rains, more collisions occur. If you look at our finance business, it's driven largely by Fitch Ratings, and that's really correlated to debt issuance. We also have pivoted the company, and it's much more of an international focus. So we have, and again, in Fitch Ratings, about 60% of our revenue is generated outside the United States.
Well, before we talk a little bit more about Fitch Ratings, talk a little bit about the retention rate. You have over 90% retention rate. How do you keep people coming back? I guess you rely a lot on data.
Our whole business model is built on data and tech-enabled data. So we aggregate extraordinarily large amounts of content. We do it continuously. We look for industries where information is quickly changing, and we aggregate it, we make it searchable, and we drive it into workflow. The way we get the subscription renewals we have is our clients are smart. They see an extraordinary return on their investment. They see the value of our service or our product being exponential in terms of what they can do in terms of insight and operations of their business.
All right, now let's talk about Fitch Ratings, because that's a business you bought part of before the financial crash, and you've kept buying more of it. Clearly, that has been a controversial business because of what happened during the bubble. Talk about where that business is now.
So that business right now is in a great spot. With interest rates where we are, with the amount of refinancing that occurs in debt markets year after year, that business has huge tailwind. We also have a growing international presence. As I said, we're in 30 countries around the world in terms of offices. If you look at places, particularly in Asia, that were largely equity financed, increasingly are seeing debt financing. So we have presence in China, we have presence in India, huge growth opportunities for us.
All right, thanks a lot, Richard.
Thank you.
Thank you for watching The Street.